Hey, this is Tom, and you better buckle up because today is going to be wet and wild. Now, we're going to talk about Palantir, Tesla, Wedbush, talking about the future of tech and growth, Peter Thiel talking about China and Bitcoin, and I got a stock I really want to show you because I think it's going to be one of the breakout stocks of this new 2021 economy. You better stick around for this. It's going to be a banger of a video. If this is your first time here, allow me to say hello. My name is Tom. I used to be a senior financial analyst. Now I'm a full-time YouTuber talking about the stock market, the financial world, and economics. And in today's video, I'm going to give you 5 things you absolutely need to know today before markets open. And for the first story of the day, we gotta talk about, you guessed it, Palantir. Now, Palantir is an extremely divisive company. Much like my mom, you either hate her or you love her. There's nothing in between. Shout out to you, mom. I'm just kidding. Don't sue me. Now, check this out. Palantir is in the news again for all the right reasons. Although a lot of people like to hate on it, smart money points otherwise. Mainstream media wants you to think certain things, but smart money flows into this company. Cathie, which is one of the great money managers of our generation, whether you agree with me about that or not, I don't give a shit, that's what I think. She literally had 0 shares of Palantir in October 2020. Fast forward 6 months to today, she has almost 20 million of Palantir shares across her 2 funds, RK and RW. Now, the news are she just added another million to RK. And the news are that Cathie Wood is buying more into the dip again. She just added another million shares of Palantir to her RK fund, raising the percentage to 1.35% of the entire fund. Just to give you an example, Tesla, which is the highest holding he has in RK, is 10.7%. So 1.35 is Palantir. That's a top 25 stock for her. Extremely high conviction. It's a no-brainer. Of course, she's buying the dip. I think that the market is slowly starting to realize what Palantir is. Much like with Tesla, it's going to take time for conservative money managers to understand what Palantir really is. And that's fine. The interim period until the market realizes that is an opportunity for me to make more money by buying more Palantir shares. That's it. And for the second story of the day, we gotta talk about Tesla, some incredible news. And again, I can't believe it, but Sawyer Merritt is back in the show day after day. This guy brings bangers on Twitter. I love him. Hey, Sawyer, shout out to you. So, Sawyer Merritt just put out this tweet, breaking. The Biden administration's $174 billion proposal to boost electric vehicles calls for $100 billion in new consumer rebates and $15 billion to build 500,000 new electric vehicle charging stations. Now, check this out. The plan also calls for $20 billion for electric school buses, $25 billion for zero emissions transit vehicles, and $14 billion in other tax incentives. Now, check this out. This is the actual screenshot that he posted. The new EV rebates, part of a $2.3 trillion infrastructure and jobs proposal, would be a potential big boost to US automakers, especially GM and Tesla, which no longer qualify for the 7,500 rebates after they sold more than 200,000 zero emissions models. Now, check this out. Essentially what it means that if this thing passes, we're getting more rebates for Tesla. Of course, other companies will enjoy some of it, but who's the biggest, fastest growing, fastest ramping auto manufacturer in the EV industry? It's definitely Tesla. It's a no-brainer, no competition. And I know a lot of people will say, well, Tom, this is going to help their competition because subsidies help usually the weak. But check this out. If Tesla gets a $7,000 rebate, imagine what would be the cost on their $25,000 car, which is probably coming next year or in a year and a half. It's going to be insane. Would you not buy a Tesla for $18,000? That's a no-brainer. Tesla is headed to Mars. Sayonara, everybody. And the next story is quite misleading, so I need you to hang tight and listen to my explanation. Now, Wedbush, and specifically Dan Ives, just came out and said tech stocks will grow by 30% this year. Very aggressive. Let me read you the paragraph, and then I'll tell you what I think he really means, because I don't think you're understanding the true meaning of this. While valuations will continue to be an emotional bull-bear debate, the fundamental growth on the horizon for these next-gen technologies is unprecedented as this fourth industrial revolution begins to take hold across the tech landscape. Wedbush Securities analyst Dan Ives wrote in a Wednesday note, in our opinion, tech stocks have an upward of 25 to 30% move in the cards for the rest of the year, despite lingering rotation fears. Now, Dan Ives is basically saying something really interesting. He's saying, don't worry about rotation. We think tech is the way to go. He's not talking about the speculative, non-profitable, futuristic stock. I think he's talking about the massive stock, the Apples, the Googles, the Facebook, the Amazons. These are the stock I think will see that 25 to 30%, at least the bulk of it. Of course, the other ones will enjoy it as well. I think Palantir will be there. I think Tesla will be there. I think what Dan Ives means here is that the main pocket of undervaluation is inside these mega stocks that got sold off in mid-February with the rest of tech for no reason. And I think he's right. I think we probably will see 20 to 30%. I know it's aggressive, but I agree with him. But don't go buying some biotech stocks that make no money and just hope it's going to explode to 30% this year. It's probably not going to happen, so be careful. Next up, we got Peter Thiel talking about China, essentially claiming that China might be weaponizing Bitcoin against the US dollar, which is not completely unfounded. I can see that happening. But here's the thing. Peter Thiel also owns a Bitcoin mining company from Texas. So you got to disclose that every time you have a discussion. Of course, he's pushing for some American protection against American companies. Of course, it's pretty much the same thing he does with Palantir. He's really national as far as protecting US interests. However, here's the thing. Even though I think China is actually trying to weaponize pretty much everything against the US dollar, they did it with the euro, they have a lot of aspirations to dethrone the dollar. You can't blame them for wanting to do it. They're fighting for top dog. I think the US is doing the most of the damage to itself. When you print so much dollars, in fact, when you print 40% of the dollar in 1 year, you open yourself up, you become vulnerable. So I do agree with Peter Thiel that China won't miss any opportunities to fuck with the US, especially with cryptocurrency. But I think the US best course of action is not to fight China, it's basically to strengthen the dollar. The only way to do it is to print less of it. Simple. If you print less of it, you can actually compete. The main reason a lot of Americans also actually move to crypto from fiat money is because of the scarcity effect. When you're printing so much of it, people will trend towards cryptocurrencies. Simple. So Peter Thiel is right here, but it's only part of the story. You got to look at the entire picture here. And the next story of the day is about my next rotation stock. I hold no position right now, long or short, but after this video, I will plan a long position sometime in the next week. Now I'm talking about Qualcomm QCOM. This is already a massive player in 5G. The only main issue they had, the major risk that they had, was antitrust issues. And the FTC went after them. But about a week ago, this thing got cleared out. They're no longer going after Qualcomm. This thing has settled. No antitrust issues. And look at the main two valuations, which I always like to take a look at, which is PE to GAAP, trailing 12 months, and EV to EBITDA, trailing 12 months. Look at this. In one, they're 33% undervalued. In the other, 20% undervalued. And that's a leading company. We're not talking about some Joe Schmo startup. This is a massive company. Look at this. They almost have no short interest. I'm about to show you their numbers. It's pretty insane. Look at this. 1.93% short interest. It's a $156 billion company. Look how undervalued they are. Now, I think that's the next big play for 5G. I think they're going to be massive. I'm going to put a lot of money into this company. For me, that's a $170 stock. Right now, they're $140, so there's $30 here to be made, about 20%. Now, I will put out a full video with DCFs and all that good stuff about this company soon, but I just wanted to let you know in advance because I think at 140, it's a really good company to own. For me, personally, allegedly, that's just my opinion. Might be inaccurate, might be wrong, doing research. Because as you know, this is not financial advice. This is just entertainment and me sharing my opinion. And as always, a huge thanks for the channel members and the Patreons for actually supporting this channel all this time. You guys are amazing. We just did another 10% on CrowdStrike. We went in at 177. The stock did 10%, and we still think there's another 13% baked in. So shout out to everybody in Patreon who actually went into CrowdStrike. Amazing. I'll see you guys in the next video.